Have you ever watched someone turn a few $100s into life-changing wealth in just months, while everyone else was arguing about whether Bitcoin would hit $150,000 or crash to zero? A small group of people were quietly building massive stacks using strategies most investors have never heard of. Today, ladies and gentlemen, I'm going to show you exactly how they did it and why the traditional buy and hold approach might actually be costing you a fortune. What's going on, everybody? I'm Mr. Bitcoin Maxi. We are all Bitcoin Maxis. Now, before we dive in, let me be crystal clear about something in this video. What I'm about to share isn't financial advice and it carries serious risks, okay? But if you're tired of watching Bitcoin pump while your stack stays the same size, these techniques actually could change everything for you. Now, by the end of this video, you'll understand 5 powerful methods that smart money uses to accumulate Bitcoin faster than you ever actually thought was possible. Now, let's start off with the elephant in the room, okay? Now, most people think stacking Bitcoin quickly means taking huge risks or getting lucky with timing. Now, I want to put this out there, that's completely wrong, okay? The fastest Bitcoin stackers I personally know, don't rely on luck at all. They use systematic approaches that actually compound their holdings over time, and the results are absolutely mind-blowing. Now, the first method, okay? Got a pen and paper? Write these down, all right? I recommend it. Now, the first method is called dollar cost averaging, but with a twist. Everyone knows about regular dollar cost averaging, but here's what separates the pros from the amateurs, okay? Instead of buying the same amount of Bitcoin every week, they adjust their purchases based on fear and greed indicators. When the market is terrified and everyone's selling, they double or triple their normal buy amount. When euphoria hits and your neighbor starts asking about crypto, they pull back completely. Now, the psychological arbitrage works because human emotions are ultimately predictable. I've seen people build stacks twice as fast as regular dollar cost averaging investors just by paying attention to market sentiment, right? Now, the key is having a systematic approach rather than trying to time individual dips. You're not predicting prices, okay? You're exploiting ultimately human nature. Now, the second technique will actually surprise you all. It's called the velocity strategy, and it's based on a simple principle that most investors completely ignore. Now, Bitcoin's price moves in cycles, okay? But within those cycles are smaller patterns that repeat over time, and smart stackers use these micro cycles to increase their Bitcoin holdings without adding new money. Now, here's how it works, okay? Stay with me. During ranging markets, Bitcoin typically bounces between support and resistance levels multiple times. Now, instead of holding through these swings, velocity stackers sell portions of their holdings at resistance and buy them back at support. Now, each successful round trip increases their total Bitcoin amount. Over months of ranging action, this can add 30 to 50% more Bitcoin to their stack. Now, the psychological challenge here is enormous, all right? It requires selling Bitcoin when it's going up and buying when it's going down, which feels completely wrong to most people I know. I used to be the same exact way. Now, however, the math is undeniable. Even with trading fees and occasional mistakes, the compounding effect over time is massive. Now, let's talk about the third method, and this one might actually shock you all. It's called productive Bitcoin stacking, and it involves using your existing skills to earn Bitcoin directly, while everyone else is converting their paycheck to fiat and then buying Bitcoin, right? Smart stackers actually skip the middle step entirely. Now, this could mean freelancing for Bitcoin, right? For example, selling products for Bitcoin or even negotiating to receive part of your salary in Bitcoin. Now, the average is just avoiding conversion fees, all right? It's the psychological benefit of earning Bitcoin directly, okay? When you earn it through your work, right, you're less likely to panic sell during downturns because your relationship with those coins is indifferent. Now, I know freelancers who've built sustainable stacks this way without ever buying Bitcoin with traditional money. They started small, maybe earning $50 worth of Bitcoin per month, but compound growth and rising prices turn those small amounts into significant holdings. The fourth strategy is where things get really interesting here. It's called the credit arbitrage method, and it only works in specific market conditions. It's very important to understand this. This involves using low interest credit to purchase Bitcoin when the risk to reward ratio is basically extremely favorable, okay? Before you panic, this isn't about maxing out credit cards to buy crypto, okay? That's financial just ruin, and I don't recommend that at all. Now, this strategy only makes sense when three conditions align perfectly. Now, first, you need access to very low interest credit, ideally below 5% annually. Now, the second, Bitcoin needs to be in a clear accumulation phase with strong technical support. Now, third, you need sufficient income to service the debt regardless of Bitcoin's price movement, okay? Now, when these stars align, some stackers have doubled or tripled their holdings in months rather than years. But the risks are enormous. If Bitcoin crashes while you're leveraged, the consequences can be devastating, and trust me when I say that. This method requires ice-cold discipline and should only be attempted by experienced investors with substantial safety nets. Now, the fifth and final method is probably the most powerful. Save the best for last, right? But it requires a complete mindset shift. It's called ecosystem participation, and it involves earning Bitcoin through activities within the Bitcoin economy rather than just buying it. This includes running Lightning nodes, okay? Providing liquidity, participating in mining pools, or even content creation focused on Bitcoin education, for example, like this channel. Now, the beauty of ecosystem participation is that you're building multiple streams of income while accumulating Bitcoin. You're not just betting on price appreciation, okay? You're actively contributing to Bitcoin's growth while getting compensated for it. Many of the largest Bitcoin holders started this way, and trust me when I say that. Now, building their stacks through participation rather than purchase. Now, here's what separates successful Bitcoin stackers from everyone else. They think in systems, not trades. They focus on accumulation rate, not account balance, okay? And most importantly, they play the long-term game while using short-term strategies to accelerate their progress. Now, the biggest mistake I see is people trying to stack Bitcoin quickly by taking enormous risks on single trades. That's not stacking, okay? That is what we call gambling. Real Bitcoin accumulation happens through consistent application of proven strategies over extended period of time. Now, remember, every method I've described requires careful risk management and through understanding before implementation. The goal isn't just to get rich quick, okay? It's to build wealth systematically while managing downside risk. Now, ladies and gentlemen, if you found these strategies valuable, make sure to subscribe and let me know in the comments which one you guys thought was the most valuable to you. And if you're implementing any of these strategies, I will be coming out with more videos. I'm Mr. Bitcoin Maxi. We are all Bitcoin Maxis. Have a good day. Be safe.